and I welcome you to the ABCs of Health Insurance. I am a licensed health insurance broker with my own agency in the state of Texas, Just the Facts Insurance Agency, and I'm also a licensed health insurance counselor. I'm here to help explain the confusion that is health insurance, especially for individuals. Insurance is evil. Let's turn evil into easy with answers. Today's letter is F. F stands for family. Understanding the family grouping or how your family is covered is an important part of your health insurance education. On a family plan, you can cover 2 adults as parents and then any children, biological or adopted, under age 26. While your kids are children that whole time and covered up to age 26, pediatric services such as the vision and dental care required by the Affordable Care Act are discontinued after the child turns 19. The children do not have to be living at home. They do not have to be in school. They do not have to be unmarried. These are all changes that occurred when the Affordable Care Act was passed. This was designed to help make sure that we didn't have our kids going broke trying to get their own health insurance. There are some special family situation allowances as well. If a person is a legal guardian of a grandchild, a niece, a nephew, or some other situation, then they should be able to cover that child as part of their family group. It mostly boils down to who is in your tax household, but a child you're no longer calling a dependent on your taxes is still your child till they're age 26 on your policy. That's clear as mud, right? This can get tricky when you're applying for the marketplace tax credit. It may be at that point cheaper to put a child that's in their 20s on a separate plan. The marketplace tax credits are based on household income, and anyone covered under the policy is supposed to count their income towards that total. But if your child is on a separate filing for taxes, living independently, then it's maybe better for them to get their own plan. Used to be that it was cheaper, and in some cases better, to cover the whole group together. But these days, until you're dealing with a family larger than about 5, not so much. This is significant for some households where you might have one person who has a lot of medical issues and expenses and the rest of the family doesn't. You may want to get a higher end coverage plan for that one family member who has a lot of expenses and get a higher deductible plan for the rest of the family. Looking at the numbers for the whole year, as always, helps you figure out what plan is going to fit your family and your budget best. I've also noticed that you can put children on their own plan through the Affordable Care Act, and this is at any age. This sometimes is helpful if an employer plan is very expensive to add your family to. Sometimes it's cheaper to have an individual plan for that child. And when you're comparing those employer plans, small group plans, or however that works for your family, you want to look at the number of people in your family because sometimes, especially for a larger family, that small group or employer plan may be cheaper because an individual plan takes a premium for every single person, but a group usually does a single, a couple, or a family. So if you've got multiple children, that family grouping rate could save you quite a bit over the individual policies and premiums. One downside when you cover separately, the family deductible and max out of pocket is capped at $14,700 for 2018. And so you have a deductible, and it's per person, but usually only 2 or 3 times total deductible for the family. And that's true for the max out of pocket as well. So if everybody is contributing to that same 14.7, you know that's the max that in family medical expenses for the year. A smaller family, this doesn't matter so much because the individual deductibles usually just add up to the same family total. Now, this does not mean that when one person has met their deductible and max, that the max is met for everyone. The individual deductible is currently $7,350. So if one person spends a lot of time in the hospital and meets that max, that does not meet the max for the family, even though total expenses may have been over that 14.7 or total bills. You really need to pay attention to what you're paying. Finally, when everyone is on a same plan, it does not matter due to HIPAA regulations about sharing, and that's something else to be aware of. You cannot share information among adults without their permission. So once your child is 19, you're paying for the insurance and still paying all the medical bills, but without written permission, you can't access those medical bills. I can promise you this gets tricky. Even if you just need receipts for coverage to file for a supplemental plan or something, you've got to get that kid's permission, and sometimes they don't want to give it. This also applies to spouses. So it's good to keep this in mind and have those written permissions in place so that if an emergency arises, you're not stuck not having the power of attorney to help make decisions for your family member. Thank you for taking the time to listen to me today. I hope you found this information helpful. Do you have any health insurance questions? Check out my other videos or leave your question in the comments. Education is important, and that's why I created Just the Facts Insurance Agency. It's just the facts you need to protect those you love. Peace and health to you all.